Hello friends, welcome to our next lesson. In this lesson we are going to learn about the different types of investments available in the stock market. In this primarily comes as IPO. It falls under the equity. Okay, what is meant by IPO? IPO means it is an initial public offering. That means if any company wants to list in the stock market, they first have to offer the shares to the public through this process. So by issuing these IPOs, any company will become a public, because the investors like us, means the public, is investing in them and so on, because we are becoming the shareholders of such companies. So the companies are known as public limited companies. Whatever the companies listed in the stock market are known as public limited companies, as explained before. So how it will be issued? So to issue an IPOs, a company needs to hire an investment bank. Means what the investment bank will do, they will write the agreement and the registration statements to the SEBI. Means they write they take all the procedures and everything, and they will do this. In India, majorly Carve will do that, because Carve is known for many people, so I'm saying that name. But there are very other investment banks also, like SBI, like HDFC. Private banks will also do this. Investment bankings will do this process. So after writing to the SEBI, the IPO release date and record date and listing dates will be released. Means IPO release date means the date from which we can subscribe to the IPOs is known as the release date, and record date is the end date. I mean, by that date, whatever the subscribers are received, they will are all that such date is known as record date. And listing date means that date is the date where they are going to list in the stock market. Means they comes into the secondary market. Initial public offering is known as a primary market, because initially they are issuing it and shares are not available in the market. So such companies process is known as happens in the primary market. Once companies decides to issue IPOs, they will issue 5 days period to subscribe to the public. Means before that also they will do the marketing and everything, but will have 5 days period to subscribe. So for that we can apply through the designated banks, brokers, etc. So once the IPO price is finalized, the stakeholders and underwriters work together. Means the stakeholders means the already existing company board of directors and every chief financial officers team. They will decide with the help of undertaking underwriters, means the investment banks, to issue the shares to the company, I mean to the investors like us. Means if they are issuing 1 lakh shares, n number of people, and they will say that minimum investment size also. So minimum they will say like 10,000, 1 lakh, like that they will issue that also. So based on that and based on the demand, the subscriptions goes on. And after the record date, if the IPO of any company is being oversubscribed, means if we consider is 100%, if it is oversubscribed to 120%, then they will start allotting the stocks after the initial date at the price of the decided price, and they will issue not fully subscribed stocks. They will issue based on the availability of the stocks. So once we got allotted with the shares, such shares are stored in our demat account. Means once it is issued, it will take 2 working days to show it in our demat account, because they will take trading day plus 2 other trading days to reflect in our demat accounts. So once everything is been done, I mean once we got the shares in the demat account and everything, and after the shares are subscribed and everything is completed, they will list in the stock market. And once they listed, it is known as a secondary market. Means secondary market is where the trading means, once you subscribed, you got some shares, you can sell it off in the market, or you can, because there are people who wants to subscribe but they don't have enough maybe due to different reasons, like they don't have enough money, or they don't have uh, they want to see how much it is interested by the public, or some may don't find the time, or some may miss the opportunities, or due to our subscription some may miss the required shares may not be issued to them. So such people want to try to grab the shares from the secondary market. So that's how the price and demand, as I explained before, demand and supply starts in the market, and such thing is known as secondary market. What the trading, I mean like intraday trading, investments, everything after IPO will happens in the secondary market, and it is known as a secondary market. Primary market is only the place where the IPOs, where the company is initially starting, will comes in the primary market only. Majority of the market happens in the secondary market. Yes, some shares are available in the gray market. Gray market is nothing but, yes, some of the shares are available in the gray market. What is a gray market? Gray market is nothing but, if the IPOs has been released, but not everyone will get the shares before itself, it's before it coming into the share market. Either we don't get it in the subscription also. So what happens is that this is the place where we'll get the we'll get the shares. Because how we'll get this, they will, those who got the shares will sell it to us through the gray market. Means they will transfer these shares after the stock market has been listed, after they have listed in the stock market, so and so. But it is not regulated market, and there is a scope of getting cheated very easily, and it is most common in this market. But this gray market is used by the major investors, my high-end investors, because they will try to understand the demand in the market. They will go for the gray market analysis, but it is very deep, and it is not needed for us as in basic investors. Those who are investing in very huge amounts, they need such analysis. So that concludes our details about the IPO.